Holy crypto, we've got some absolutely insane whale activity happening right now that's got the entire Kaspa community buzzing. What's up, crypto family? Welcome back to Gold Rush Crypto Daily. I'm your host, and today we're diving deep into some serious smart money moves that could signal something massive brewing in the altcoin space. We're talking about a $49 million whale accumulation spree, potential short squeezes on the horizon, and technical analysis that's looking absolutely bonkers bullish. If you're holding KS or thinking about jumping into altcoins, you do not want to miss today's episode. Before we dive in, smash that like button if you're ready for some serious alpha, and don't forget to subscribe with notifications on because the crypto markets are moving fast right now. All right, crypto family, let's start with the story that's got everyone's attention. Multiple prominent crypto watchers, including Joe Wong and Axel from Kaspa Revolution, are reporting something absolutely wild happening on Bybit. According to these whale watchers, a single Bybit wallet just accumulated over 624 million KAS tokens in the past 24 hours. That's nearly $49 million worth of Kaspa. Now, when I first saw these numbers, I had to double-check because this isn't your typical dollar-cost averaging strategy. This is what institutional-level accumulation looks like. Let me break this down for the newcomers. When exchanges or major wallets start stacking this much of a single cryptocurrency, it usually signals one of two things. Either they're preparing for massive retail demand, or they have inside knowledge about upcoming developments. Bybit isn't exactly known for making random $49 million bets. What makes this even more interesting is the timing. We're seeing this accumulation right as the broader altcoin market is showing serious signs of life. This isn't coincidence, folks. This is smart money positioning before the crowd catches on. The sheer volume here tells us that someone with serious capital believes Kaspa is severely undervalued at current levels. When you see whale accumulation of this magnitude, you typically want to pay attention to what they're seeing that retail investors might be missing. Speaking of broader market trends, let's talk about what Crypto Bull God is seeing in the Total 3 charts and why this connects perfectly to our Kaspa whale story. For those who might not know, Total 3 represents the market cap of all cryptocurrencies excluding Bitcoin and Ethereum. Essentially, it's the altcoin market cap. And right now, the monthly chart is painting a picture that's got seasoned traders absolutely excited. According to the analysis making rounds, we're looking at a potential breakout pattern that could take your breath away. Now, I've been in this space long enough to see multiple altcoin seasons, and the setup we're seeing right now has those same characteristics. Here's what's fascinating about the timing. We've got this Total 3 technical setup happening right alongside massive Kaspa accumulation. It's like watching all the pieces fall into place for a perfect storm in the altcoin space. The Elliott wave theory that's supporting this analysis suggests we could be looking at Fibonacci extension levels that historically mark the beginning of major altcoin runs. When you combine technical breakout signals with whale accumulation patterns, you're looking at confirmation from both chart analysis and on-chain activity. What really gets me excited is that altcoin seasons don't happen gradually. They happen fast and explosive. If Total 3 breaks through its resistance levels while smart money is already positioned in quality projects like Kaspa, we could see some absolutely incredible moves. Now let's dig deeper into what this accumulation pattern really means. Axel from Kaspa Revolution made a point that really caught my attention. He said, "This isn't DCA, this is game-changing accumulation." That distinction is crucial. Dollar-cost averaging is what retail investors do over months or years. Game-changing accumulation is what institutional players do when they identify a major opportunity with limited time to position. The fact that we're seeing 625 million KAS tokens move in such a short time frame suggests urgency. Smart money doesn't move with urgency unless they believe time is running out to accumulate at these prices. What's even more telling is the response from other market watchers. Scape Squad's tweet about "Congratulations sellers, you got played" really captures the sentiment here. While retail investors might be selling or staying on the sidelines, institutional money is aggressively accumulating. This creates a classic supply shock scenario. If demand increases while available supply decreases due to whale accumulation, basic economics tells us what happens to price. We've seen this pattern play out with other cryptocurrencies, and it rarely ends quietly. The smart money positioning we're seeing suggests they're not just betting on short-term price movements. they're positioning for something much bigger. When you're talking about $49 million in accumulation, you're talking about players who have done serious due diligence on Kaspa's technology and future potential. Here's where things get really interesting from a trading perspective. Kaspa Daily is reporting that over $20 million worth of short positions are currently hanging by a thread, with liquidation levels sitting right around $0.085. For those new to trading, let me explain why this matters. When traders short a cryptocurrency, they're betting that the price will go down. But if the price goes up instead, they're forced to buy back their positions to limit losses. This is called a short squeeze. With $20 million in shorts positioned at these levels, we're looking at potential rocket fuel for a price explosion. If Kaspa's price climbs to just $0.085, which is only about a 15% move from current levels, we could see a cascade of forced buying that pushes the price much higher. This short squeeze potential, combined with the whale accumulation we discussed, creates a perfect storm scenario. You've got reduced available supply from whale buying and potential increased demand from short covering. What makes this even more compelling is the timing. Short squeezes are most effective when they happen during broader market uptrends, and with Total 3 showing bullish signals, the setup couldn't be better. The beautiful thing about short squeezes is they create momentum that attracts additional buying from retail FOMO. Once that cycle starts, it can drive prices well beyond what fundamental analysis might suggest. Now let's talk about why someone like David is suggesting Kaspa looks like a $7 cryptocurrency rather than a 7-cent one. This gets to the heart of what makes Kaspa special from a technology standpoint. Kaspa's Ghost DAG protocol represents a genuine innovation in blockchain technology. While most blockchains process transactions sequentially, Kaspa allows for parallel block creation with instant confirmation. This solves the classic blockchain trilemma of security, scalability, and decentralization. When you look at Kaspa's visual blockchain representation, it's unlike anything else in the crypto space. This isn't just another Bitcoin fork or Ethereum competitor. This is a fundamentally different approach to how blockchains can operate. The current market cap of around $2.29 billion with daily trading volume exceeding $55 million shows there's already significant interest, but the technology suggests we're still early in terms of adoption. If we're talking about a potential move from 7 cents to $7, that's a 100x increase. While that sounds extreme, remember that innovative blockchain technologies have delivered these kinds of returns before when they gain mainstream adoption. The key is that institutional money seems to be positioning for exactly this kind of long-term appreciation. You don't accumulate $49 million worth of a cryptocurrency if you're only expecting modest gains. The beautiful thing about today's stories is how they all connect to paint one bigger picture. This ties into another interesting development that's got the trading community excited. Speaking of smart money moves, there's another angle to this story that's worth considering. All right, crypto family, let's wrap this up with the key takeaways from today's episode. We've got institutional level whale accumulation happening in Kaspa with $49 million worth of tokens moving in just 24 hours. We've got technical analysis suggesting the broader altcoin market is setting up for a major breakout. And we've got a potential short squeeze scenario that could provide additional upward momentum. When you combine cutting-edge blockchain technology with this kind of smart money positioning and technical setup, it creates the perfect storm for significant price appreciation. My overall market sentiment right now, extremely bullish on quality altcoin projects, especially those showing institutional accumulation. The pieces are falling into place for what could be an incredible altcoin season. What do you think about this Kaspa accumulation pattern? Are you seeing similar whale activity in other projects? Drop your thoughts in the comments below. I read every single one and love hearing your perspectives. If this analysis helped you understand what's happening in the market, smash that like button and subscribe for daily crypto updates. Tomorrow we'll be diving into more altcoin opportunities that smart money is positioning for, so make sure you hit that bell icon. Remember, crypto family, this is not financial advice. Always do your own research. But when whale accumulation, technical breakouts, and innovative technology align like this, it's definitely worth paying attention. Until tomorrow, keep stacking and stay bullish.